So if you were a personal friend and you're really concerned about the market, which is kind of all over the internet right now, the stock market's kind of at all-time highs or near all-time highs. I'd say market optics and volatility in the Iran war, what's happening with Japan's currency, and like the Treasury, our Treasury, US is stepping in to help make sure their currency doesn't collapse. There's a lot of, I'd say, fear, but also just heavy uncertainty in the marketplace. If you want to understand how to create a really rock solid financial foundation for your family, we have found that the clear path is owning affordable housing across the great growth-oriented markets in the country. Diving in deeper, you have a dynamic where most people, globally speaking, a significant majority of people are heavily invested in equities in the stock market, and in whether they do it in the S&P 500, other indices or indexes, or just picking stocks. You are sort of all in one asset class. And I think that's a huge misunderstanding is everyone is diversified, but they're 100% in stocks. And so if you're looking for more of a real like financial well-being, peace in your life, and you'd like to solve that, I would do it by focusing on hard assets that have a decent moat. I like really great moats, mobile home parks. You cannot build any more. So that's why we've always focused on them. We grew this company out of the 2008 Great Recession. We always had a defensive thesis in mind for the resiliency of the cash flow was always really important. So then once you start looking at the real estate side, hard asset side, you can start shifting assets from the stock market side and planning and appropriately planning to reduce taxes as well. So then once you start to look at the portfolio and grooming yourself for true diversification, you want to invest in, there's nothing wrong with having money in the equities, and everyone has money in the equities for the most part. And I totally understand that argument. And I think it's great because companies are doing great. All of the new growth that's surrounding AI, it's all a great story. The issue with it is you really need a percentage, call it, let's say 25 to 50%, I'd say, of your total net worth should be outside of that risk dynamic, because at the moment it seems frothy. PE ratios are at all-time highs, and in the end, you cannot eat and live on pure equity and stock. You need some cash flow. You need recurring revenue. And oh, by the way, how many checks are you writing to the IRS and to your state? There are significant tax loopholes and just tools that you can use to completely erase and or at least significantly reduce your tax burden every year. So if you diversify from the stock market when it's all-time highs, decide to go into hard assets with a chunk of that, call it 25 to 50%, you can offset gains from the sale of those stock while it's at a peak height. And you can then plan for offsetting the gains with depreciation in real estate investing and using tools like the real estate professional designation. There's a lot of great tax people that have made a ton of videos that if they were to start from scratch and plan their financial life around tax payment alone and reducing taxes down to zero, they would have a real estate investment company and be real estate professionals so that they could get that tax designation. Everyone should figure out how to do it in their life. And I don't want to hear any excuses. It's like, if you want to not pay taxes and be truly diversified, you just have to figure out how to do it. There are some challenges where certain dynamics, if you're W-2 employees and your husband and wife, you're both employed by a company and you are both W-2, there are challenges, but there are ways to work it around it as well and buy rental properties and manage them yourself and find a way to check the box on the real estate professional designation legitimately, because that's all we ever want to impart to anybody is that you want to become a legitimate real estate professional. But when you do that, now you can completely control your financial well-being. You know that you still have a meaningful portion, if not the lion's share, in the markets exposed to equities, and hopefully you're managing it well, and or the people that you have as financial advisors are managing it well to where you gain the growth. But then you sleep well at night knowing that you have cash flow every month from a really resilient asset class. And this is just for any, really great commercial real estate assets. There's a lot of them, so it doesn't have to be mobile home parks or manufactured housing communities. It could be industrial and industrial outdoor storage. It could be regular multifamily apartments. Like, there's a lot of ways to do it and get resilient cash flow. But I think that that's a critical component to every portfolio, and it's kind of hardwired into us because you live monthly. You don't, and like, if you're gonna plan for your retirement and you're gonna end up selling stock to live on and then start consuming principal, that's just a plan we've never liked. It's like we'd rather sip on cash flow 5+% a year, have that come in reoccurring monthly, but then over time, the asset value grows. Meanwhile, you still have exposure to the stock market, and now you've completely reduced your taxes, at least in half, if not, you've reduced taxes to zero. And so we have helped people, clients, and other just friends that are not even, associated with our business. We've helped them reduce their tax burden completely, significantly reduce it, but also boosted their returns, their net worth, their assets that are growing and paying them monthly, as well as keeping their great performing assets in the stock market. And so in the end, I feel like the punchline is you got to square up on how to minimize your tax burden, because everyone's focused on the performance of certain assets and the growth, which is obviously one piece of the puzzle you have to. But the other side of the coin is you got to figure out how to reduce your tax burden so that you can reduce that cost, and then you can grow money that is 100% dollars. You can grow that money without paying taxes and keep that money in play and in cycle and creating a great yield. So with the world and the uncertainty and the wars and all of the dynamics in the marketplace, if you're one of those people that gets kind of freaked out and you think the market's going to crash, which, there's a lot of people that say that, then it's just worth its weight in gold to transfer some of the money and the profits you've made and locking down great low risk residential real estate that is going to pay you monthly, low leverage, very resilient cash flow streams, so that you can sleep at night. Because if the stock market crashes, you're always going to have these assets. And as long as you don't over leverage or do anything stupid with debt, you can have a great cash flowing asset and you never even blink when the market tanks. So if you'd like to prioritize your life for peace and clarity on your holdings and your assets and the kind of the amount of uncertainty in the world today, we offer a suite of advisory services here. It's really just conversations with us, and we talk through it depending on the types of situations you're in with maybe some residential real estate, some old inherited family properties, assets in the stock market. We can really run the gamut and advise just purely based on experience. We're not financial advisors, so I don't mean that in any way. But what it's really nice to do is talk to somebody who understands all of the past, and we are fans of all of the different products. And so, join our private investor circle, and you can get a ton of value from us, and also schedule calls with us, and hopefully gain a ton of clarity, and we can help you through the uncertainty that we are living in real time.